All right, guys, welcome back here. Joseph James, School of Trade, Sideways Markets. Happy Thursday to you guys. Welcome back to our nightly newsletter for January 16th, 2014. Another busy day in the markets this morning. Unfortunately, I don't know, depends on how you look at it, we got exactly what we expected. If you listened to last night's newsletter, we talked about that roller coaster ride that went on with crude. All that hard work on Wednesday was most likely going to result in a little bit of a breather today, and that's exactly what we got. We did have quite a bit of news, though. We had quite a bit of Red Star news. We had some earnings reports that came out today, and it was, well, a pretty interesting session all the same. First of all, markets closing mostly flat on the session today. Again, as we predicted yesterday in Wednesday's nightly newsletter. Some of the news that we have here, jobless claims here, came out as expected. We're really seeing that ticking down in jobless claims. Most of it, though, we assume is from people's jobless benefits expiring, or they're leaving the kind of the job hunt. When we saw the non-farm payrolls, what was it, 2 weeks ago, 10 days ago or so? No, I'm sorry, last Friday. Whew, busy, busy, busy. Last Friday's non-farm payrolls, we saw a record low participation rate. In fact, they were comparing the participation to the Great Depression. So we get fewer people that are out there looking for jobs. Today's jobless claims came out pretty much as expected at 326,000. January's Philly Fed business outlook. This is actually really important. Most of our news events are reporting December because it's January. But we heard from the Philly Fed business outlook today, which is really important. Business conditions in Philadelphia, PA, came in higher than expected. We saw higher wages. We saw, I believe it was the new orders that were down, but returning orders were up. So it was a pretty bullish, pretty robust Philly Fed survey news report today. Consumer prices are stable. We talked about that yesterday. We heard from the CPI number today, which was actually leaked early. The number at 9:15 today was actually leaked late last night. Equity markets got some big news today from Goldman Sachs, Best Buy, Citigroup. Now, let me remind you guys, do you know what earnings season is? Well, first of all, in order to understand what earnings season is, you've got to understand quad witching, right? Quadruple witching, 4 times a year, every 3 months, right? You guys know quad witching pretty well because if you're an E-mini trader, the months that the E-minis expire, right, that's the end of each quarter. So it's 3, 6, 9, 12. Well, those are our quad witching months, right? The third week of every 3 months, right? Well, anyways, after we finish up the month of March, after we finish up the month of June, after we finish the month of September, you got it, count, right? And then after we finish up the month of December, after the end of each quarter, the following month is when all of the big earnings reports are released. Now, if you're trading crude, forget about it. Gold, who cares? Euro, currencies. The only thing we gotta remember about this is it's going to impact the E-minis, right? The E-minis are the stock index futures. So we know that today we had some earnings reports coming out. Why? Because it's January. Why January? Because it's the month after December. Yeah, see, I told you. It's pretty simple, right? The month after the end of each quarter, you're going to get earnings. Now, believe it or not, Goldman Sachs is getting, well, they're getting beat up right now. Earnings have really gone to the floor for them. Best Buy, I think, by the end of the day today was down almost 30%. That's 30% on one day after earnings on Best Buy. And Citigroup's dealing with some global problems out in Asia. Reality check, though. We have a lot of bullishness here in the market, but you can still see some of these big companies are having some poor earnings. Whatever the case may be, very, very positive note, though. Did you see the Russell? Well, first of all, look at the Dow. The Dow, down. S&P, down. Right? NQ, down. Everything moving lower today except that mighty mini Russell. Pretty incredible, the fact that Russell was able to hold up amid all of this kind of pounding lower on the equities, right? Usually that will drive those prices down. What was even more impressive on the Russell was the fact that it kept jumping up, trying to hit that high. In fact, we eventually, later today, and we'll take a look at that in a moment in the charts, but we eventually today were able to get all the way up above that previous high, and that was a key level. We didn't stay there, but boy, we kept poking our heads up. So it's going to be interesting to see what happens tomorrow. It definitely will. So while the rest of the equities out there were getting pounded today, the Russell seemed to find a way to hold on tight and still finish the session looking pretty bullish. Again, I'd be lying to you if I said we had a very active environment today. Gold was flat, crude was flat, Euro flat, Russell up, down, sideways. Again, pretty much what we thought was going to happen. All right. Finished up on gold at 41.90. We're just around that 94 even. I mean, literally, you could have gone for 4 or 5 hours, taking a big lunch break today, come back on crude, and we're still sitting there at 94 even. So we were definitely in balance on most of the markets this morning. Before we wrap up, though, next week, I got my radar here. We got contract rollover on crude oil. Excuse me. We got rollover on crude. Now, usually the 18th is when you're going to see crude roll over each month. But remember, 18th, tomorrow's the 17th, so the 18th will be a Saturday. So look for Monday to be the new contract, the March 2014 contract for crude. But wait just a second. Monday is a federal holiday. All right. Now, we got Martin Luther King Jr. holiday on Monday morning. All markets are closed. Remember the golden rule. He who has the gold, different golden rule. When the banks are closed, when the kids are out of school, we're staying out of the market. Now, here in the U.S., MLK weekend is a holiday weekend. Monday is a federal holiday. Statewide, though, there are actually some states that don't observe this holiday. I don't know why. I won't get into it. But just be aware, though, it's a federal holiday on Monday. That means I won't be trading. Neither should you. Whenever the banks are closed, the kids are out of school, right? We're out of the markets. What I'd recommend on Monday is rewind the tape. Do some market replay. Practice your setups and get ready for a great day on Tuesday morning. All right? So we've got a long weekend ahead of us, but we're not out of the woods yet, though. We got Friday. We got tomorrow. And I think based on the charts that we see tonight, I think we're going to have some more fireworks in store for tomorrow morning. Let's check it out. All right, guys, let's jump right into some charts here. Now, remember, all the material that I'm going over, I teach to all of my students every day, Monday through Friday at 8 a.m. Eastern Time. We open up our live trade room. We do training every afternoon. Once we finish trading, we open up the floor for questions, cover all the questions. It really is a fantastic place to kickstart your learning and earning career. I want to encourage you guys to join the free trial. On the free trial, I'm going to send you an invite to come attend our live trade room one of these days in the afternoons. You can check it out, see what you like. We offer beginner, intermediate, and advanced memberships. Check out the advanced membership information there, all right, and come and join me as a new student of School of Trade. All right, enough chit-chat here. Head over here now to the blog. And as you can see here on the blog, I've got everything set for tomorrow. Now, don't forget, if you haven't registered for the newsletter yet, make sure you register for the newsletter right there on the blog. All right? You can also do it on our homepage over at School of Trade. There's the spot there for the newsletter right there. Okay? So check it out. In the meantime, let's grab some charts. First, we're starting with the Texas T, right? The black gold, crude oil futures. Now, just like we said yesterday, we're expecting to see a little bit of a sideways range today. We really were. Had a very active day on Wednesday. And so coming into Thursday, we had a funny feeling that this price action was going to be a little bit tuckered out, if you will, and was probably going to need a little bit of downtime for about 24 hours. You know, typically these markets will go bonkers for one day, and then they'll consolidate for the second day, right? Then they'll go back to going bonkers again, and then they'll settle down, right, once again. Now, talking about crude oil, don't forget, next week we're going to have rollover. Okay, you're going to have rollover next week, so just keep an eye on the volume. I would assume that when we come back to trading on Tuesday, because Monday's Martin Luther King Jr. holiday, so we come back on Tuesday, we should be trading the 314. All right, we should be trading the 314. If we're not trading the 314, we'll be sharing volume between the 2 and the 3, and it won't really matter which one you decide to trade. Now, first of all, here's my anchor chart on crude. And you can see I really haven't changed much from one day to the next. We still have our trend line here, right? Get this big, thick trend line going up, and you can see it pretty much held all day today. Right there would be a good point. Mostly, though, we're wedging, right? We're consolidating. And again, this is exactly what we kind of expected today. Obviously, we would have loved to have had a big range day again, but we got consolidating price action. Now, members, don't forget, there are specific Fibonacci levels that we look for when we see we have a consolidating market. So don't forget to consult with your course materials, or remind me to talk about that tomorrow when we open up our room at 8 o'clock and do our morning prep. First things first, when we see a market structure, okay, so we kind of refer to this as, when we see a market structure like this, the first thing I think of is fake out breakout, which means if we get price to go lower, we're looking to buy it and bring it back in. If price goes higher, we're gonna bring it back in, right? So price goes lower, it comes back. So bottom line, when you see these consolidated markets, expect that fake out breakout. Expect that fake out breakout. So as price rises, I'm selling. As price falls, I'm buying. And you remember what Mama said, right? Mama said, Joe, don't you dare fiddle with the middle, right? I'm half joking around with you, but we have a little saying in our trade room that goes something like, don't trade the middle, right? Don't fiddle with your middle, right? It's a kind of a little play on words there. So stay away from the middle of this range, buy the lows, sell the highs, and as you can see here, and again, this chart's up on the blog for you here, as we go lower, we have some key levels here that we can look for a buying opportunity. 93.14, and really, as long as we stay above this 92.66, we're still bullish in my opinion. But once we get below 92.66, that's going to be the last call for those buyers, and we should be selling short below 92.66 down to 92.12. With all the economic news coming out recently, with the just overall bullishness of the market in 2014, I have to err on the side of the bull side. So if we do jump, we are in a position right now where, I know it's tough to see this, let me zoom in a little bit closer here. When you zoom in a little bit closer, you can see that one of the good things, if there is a silver lining inside of this type of price action, is that the moving averages are all right, condensed right in the middle. So it would be very easy for us to see a new higher high, pull back, and then go. Now, members, one more thing. What do we always have to worry about when we look at a wedge or a consolidation area? We have to worry about these swing highs and swing lows. Do you see that swing high right there? See that swing low right here? That's going to be the fake out breakout range. So anything that happens within that range, right? We go up, we come back, we go down, we come back, right? Anything within that range should be treated with a little bit of caution. So we mark up our levels here, 94.34, we'll say 93.82. Bottom line, what I'm looking for is, if we go higher, I'm going to use that 94.34 as support. All right, that's one of our hidden secrets for trading a consolidated triangle or a wedge, right, or a flag or a pennant, whatever you want to call this thing. Okay, so make sure you remember, mark those highs and lows. That becomes now my support, and I've got to get out of that area if I'm going to be selling short, all right, or buying long. Okay, inside of that range, that's where we're going to have that fake out breakout zone. Now, if we go lower, I wouldn't recommend you sell short until we get here below 93.46 if you're going to sell short. I would pretty much wait here because this is most likely going to hold. If it doesn't, then fine, right? Then we learn that the sellers are stronger than the buyers here. But the most important thing right now is be alert for that fake out breakout. Okay, if it goes higher, we're going to use that high, right? We're going to use that little high right there as our point of entry. Okay, and if it gets below it, it's going to collapse right back down in. In addition, we've got targets up here at 94.63, 94.77, and 95.06. I actually got two more up there, 95.51 and 96.02. So make sure you're aware of those targets if we're going long. Now, it would be easy to assume that price could easily go up, hit that 94.63, and come right back down in. So we must be kind of on our best behavior here, right? We don't want to be buying directly into that 94.63 Because most often what's going to happen is it's going to get really narrow, and then it's almost like a jack-in-the-box, right? Dun, 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 right? And then all of a sudden, bam, right? It just goes. But what usually will happen is right when you think it won't stop, it collapses, crude traders take profit, guys like me will take our profit, and it'll tumble right back down. So the hardest part about tomorrow is going to be at what point does this market start to run away, right? Because we have a funny feeling it's going to be a little bit range bound, right, unless we get some serious kind of change in market sentiment. Hopefully tomorrow morning's big news at 8:30 will give us a little bit of a kickstart, right, and kind of shake out one side or the other. But bottom line though, I've got levels below me that I'm going to use to buy. I've got levels above me I'm going to use to sell or to take profit. And so we're ready to go here for tomorrow on crude. Looking quickly here over at the VIP chart. Now go back and rewind the tape, guys. If you rewind the tape, what do you see? Well, we talked about this last night. If we opened up above 94.64, we were going to be very bullish, right? We also talked about if we opened below 92.73, we'd be bearish. Well, look what happened. Closing print yesterday, just as we had talked about. This is exactly what we discussed yesterday. Closing print yesterday was just below the previous week high, almost as if to just scream at us that those buyers were just playing around. This morning, where did we open up? We opened up literally right, bam, smack down on top of that previous week's high. And then as you can see what happened, it was literally just up, down, up, down, up, down, and sideways most of the session. Most important thing here, though, is that we have a very narrow sideways range, closing print in the middle. Those clues tell us a very interesting story. So a sideways range now, right, 2-day relationship, we are sideways from one day to the next. A little bit lower, but basically sideways. That tells me that we are wide open for buyers or sellers tomorrow, okay? Ain't nobody got control right now. The narrow range, now you should know this one by now, the narrow range today is going to mean what? A very wide range tomorrow, most likely. Not a guarantee, but we are looking forward to it. And then the closing print in the middle. The closing print in the middle, again, just tells us right away, wide open, the buyers or the sellers, this is anybody's game. Now, usually this will happen right ahead of a major political announcement, ahead of a major news report. So it feels like, kind of smells like maybe most of the traders right now are just waiting to see the rest of those December news reports coming out tomorrow. Specifically, we're talking consumer sentiment, right? Consumer confidence. So it's going to be an interesting day tomorrow on crude. Again, the big problem we have right now on crude is that we have literally anything can go right now, right? Buyers can grab it, sellers can grab it. Just make sure you're aware where we open tomorrow. If we open up below 93.60, we're looking bearish. Open above 94.64, looking bullish. And remember, we have ourselves some wide open spaces up here if those bulls take off. If the sellers grab hold of it, though, we're still going to be open-minded for that buy, right? Because we won't exactly know that the sellers have control until we get down below this 92.66, all right? Doesn't mean I can't sell short between these two levels. I can sell short below 93.46 to 93.14. Got a very small range there. And technically, I can sell short below the high of this range down to the low of this range. And then once we get below 92.66, it's look out below, and we should have the blood in the water at that point. We should be selling aggressively at that time. All right, there's your crude. Now, moving from the black gold to the golden gold. Let's take a look here now at the anchor chart. We'll start with the VIP chart on gold. And the first thing we see here is, yep, a lot of the same stuff. I told you guys we had some flat price action today, pretty much across the board. First things first, what's our 2-day relationship? 2-day relationship, sideways. What's our range? Our range is, well, if you compare it to yesterday's range, it's about the same. But historically, though, that's a very narrow range. And then closing print right in the middle. So here we are, 2 days in a row. Narrow ranges, sideways, choppy, sloppy with a closing print in the middle. We're still unable to keep above that previous week's high. And we can see here we got some great targets up here, right, if we can get this thing going to the upside. When I look at this chart, I think to myself, something big is coming, right? We very rarely see gold do this very long. Okay, this tells me that we're waiting on something. What could we be waiting for? Well, we got some major news tomorrow. We got a holiday weekend coming up. And then next week, we start with all fresh January news reports. So it's going to be an interesting scenario tomorrow morning. If we open up above the 1249 or 1244.9, we're going long here. Don't forget, take some profit off the previous week's high. It may get stuck in the mud at that previous week's high for a little bit, but those buyers will try to hit, right, that 54.9. If we open up inside, you guessed it, two-sided trading. What do we do if we open up inside? If we open up inside, I'm going to buy yesterday's low. I'm going to sell yesterday's high. I'm going to buy yesterday's value area low. I'm going to sell yesterday's value area high, right? And I'm going to avoid the point of control. Okay, a little market profile terminology there. If we open up below 37.1, we're going to be bearish. We're not going to have that much room to go, though, so make sure you take some profit off at that 33.5. I will be looking to sell short, though, down. We got a couple different targets down here for us that are just screaming at us. Now, remember, these targets, these levels below, these haven't been hit in over a week. So you're going to have some significant draw, right? If we get some strong consumer confidence readings tomorrow afternoon or tomorrow morning, right? Friday morning we got consumer confidence. About 10 o'clock in the morning tomorrow. So be ready for this gold to react very strongly, whether it be up or down, to tomorrow's consumer confidence number. Moving forward, taking a look now at the anchor chart on the gold. Again, we can see quite a bit of the same stuff that we saw yesterday. Now, you can see here, we've got a bullish channel. Clearly, we're seeing bulls somewhat in control. We got higher highs, higher lows. So right off the bat, we're thinking bullish. Okay, the VIP chart told us that we were expecting something big coming here soon. And if these bulls really do hold on tight, you can see we're above all the moving averages. So right now, we literally do have the green light here now to be buying gold. Okay, we don't have to wait for anything. All we need now is an entry pattern. As always, if price goes lower before it goes higher, I'm looking at buying the 40.4. I love the idea of buying this trend line. This trend line down here looks delish. 37.7, 36.8. You got two levels there. And that trend line, now remember guys, trend lines are not specific price levels. They are ranges. So you want to be looking for that reversal somewhere around that trend line. Doesn't need to be exact. All right, trend lines, think of a trend line as a big, thick marker, right? Not a fine point pen. All right, so those trend lines are going to be ranges. At the same time, if we don't look back, if we go right higher here, if we don't look back, I've got targets at 44.2. I have a major reversal target there at 45.8. I will be taking my profit there, and I might even look for a short, depending on how the price action looks at that time. I'm a big fan of trend following. It helps my students make money. It's easier to shadow trade. And usually, if you get in late to a trend, you can still make some money. So I'm usually going to follow the trend, 44.2, 45.8, 46.7. Got a big target up there, prior week high. We talked about that a few moments ago, right? Expect that prior week high to be a magnet. And then we got some juicy targets up here, 1252, 52.5, and 50.3. So we've got plenty of opportunities. As this price rises, we keep making new higher highs. You better believe it, I'm buying pullbacks using my wave pattern long, and I'm going to use these targets here, right, to ring the cash register. If we go lower, we got buying opportunities here, 40.4. The trend line around 37.7. Just remember, if it takes a while to get to that trend line will be a little bit higher. So just remember, the trend line's around 37.7 right now, but that may change. We have one more important level here at 35.8. Now you get new lows below 35.8, and this party is over for those buyers, and we're now selling below that 35.8. right? So we're getting short here below the low of day from Thursday. I'll tell you guys, it's shaping up to be a very ripe and very exciting Friday morning. We get consumer confidence on the calendar, which is always big for gold traders. Last but not least, we can't forget about the mighty mini Russell. Now, this is the little market that could today. While the Dow and the S&P were getting their heads handed to them after Goldman Sachs and Best Buy and the rest of the lackluster earnings reports, the Russell kept on pushing. In fact, the first thing we saw this morning, it was incredible. We were watching this in the trade room this morning. And of course, remember, this is what led into this. We had a very small range yesterday. And if you recall, last night, I was thinking, boy, we're probably going to get a big range today. And we talked about if it opened up above the highs, we'd be bullish. Well, we didn't get the open above the highs. We actually got the open just off the highs. But if you were watching this price action, you saw how we literally tried 3 times there. And for a moment there, it seriously looked like those buyers were going to get it done. But they couldn't get this 15-minute candle to close above the previous high of day. We sank off those highs, tested the value area low, and then went right back up again. So we really have some strength behind this personality. Now, I know we had a very lackluster day. I know it was a very range-bound, narrow day. But guys, think about what else was happening out there in these equity markets right now. Everything else took a dump, right? Took a dive today, except the Russell. So what does that tell me? Well, once again here, 2-day relationship sideways, range is narrow, and once again, it's like a carbon copy. What is this, Groundhog Day? We got same thing we saw yesterday. Closing print near the highs, but couldn't stay above it. So even though we see some very bullish personality here in the Russell, we can tell there is still some inherent weakness under the surface there, almost as if to make it more difficult, right, for those buyers. So we got to get above that 1170.3 tomorrow morning. If we open up above that 1170.3, we are buying every step of the way as long as we stay above that 70.3. All righty? Now, remember, opposite side here. Now, I'm going to go ahead and call this inside the range. I'm going to wait to get below 61.9. If we can open below 61.9, I've got targets down here now around 1148. If we open up anywhere inside this range, though, okay, anywhere inside this range, this 2-day range, we must consider this to be a two-sided market. We will buy the lows. We will sell the highs until they fail. The most important thing we got to do tomorrow is see where that opening print comes out at 9:30 a.m. Eastern Time. If we get a nice bullish opening print, all this guesswork, right, is behind us. The most important thing, though, is going to be if it opens up inside the range, be ready for those fake out breakouts, right? If we open up inside the range, be ready for those fake out breakouts, all right? Make those sellers prove to us that they really want to get short. Make those buyers prove to me that they really want to get long. If we open up inside the range, that tells us, it screams at us, be on the lookout for a fake out breakout. Alrighty? There's your VIP. And last but not least here, folks, we've got your anchor. Your Russell anchor looking very similar to gold this morning, as you can see, or this afternoon to say. We got a bullish channel, higher highs, higher lows, right? We've seen that all week. We know we've had a bullish move on this. I've got levels below me here at 61.7, 64.9, 66 even, 67.6. As you can see, we've already reacted to that 67.6 at the time of this film. I've got targets now overhead, 1170.4, 1173 even, 74 half, and 76.4. Not to mention, we get the top of that channel. Okay, later we go, the higher the top of that channel will be. Most important thing right now to be aware of on the Russell. Bullish channel, higher highs, higher lows. We got great support below us. Moving averages are all below. Guys, we have the green light here right now to be buying. So just like gold, nothing standing in my way right now besides finding the simple entry pattern that we teach you guys right in our trade room every day. So be on the lookout for the buy. If you're not trading pre-market, wait tomorrow to make sure you see that opening print. If the opening print is above the highs from Thursday, we're bullish. If it's within the range from Thursday, we're two-sided. If it's below the lows from Wednesday, right, that was 61.9, below 61.9, then we know it's time to be selling off. Again, lots of major news tomorrow morning. This is an E-mini market, so keep in mind earnings reports will definitely have an impact on this as well. That wraps up our nightly newsletter, folks. Before I let you go, I want to encourage you guys to register for our free trial. Don't forget, on our homepage, you can register for the free trial. You can join our nightly newsletter. Monday is a holiday, no trading on Monday. Next week, we got rollover for crude, most likely on Tuesday. And you guys have yourself a fantastic Thursday evening. Signing off for now. Don't forget to learn it so you can earn it. We'll see you guys tomorrow. Adios, amigos. Bye-bye for now.